Greetings and welcome to the University of Minnesota Alumni Association's webinar series. My name is John Ruzek, and I'm the Senior Director of Alumni Networks and your host for the webinar today. Thanks to all the alumni and friends who have made time to join us live. And today's webinar will be on student debt management and refinancing and is being presented by our partner Preble. Today's webinar is part of an ongoing free series being offered by the Alumni Association, where we're having conversations with experts about career, life, and learning topics. And to date, we've had nearly 6,000 day of attendees and over 14,000 YouTube views of the series. So thanks to everyone who keeps tuning in and taking advantage of these webinars. Initiatives like these are made possible in part by our Alumni Association members. And if you'd like to help support these types of opportunities, consider becoming a member, and you can learn more at umnalumni.org/membership. We'll have one more webinar coming up before the end of May on May 24th, and it will be on U of M research that's shaping early autism identification and intervention. We have two great faculty out of the med school and also the College of Liberal Arts who will be talking about their research in this area, and you can learn more at umnalumni.org/virtual. Few housekeeping items before we get started. You have joined the presentation listening using your computer system, speaker system by default. If you'd prefer to listen over the telephone, just select telephone in the audio pane of the GoToWebinar panel and dial-in information will be displayed. If you experience audio difficulties while listening, listening via your computer speakers, you might want to shut down any background applications you have open or move to a hardwired internet connection versus a wireless signal. Questions will be welcome at the conclusion of today's speaker. She'll be talking for about 20 minutes, but then after that point, we will be wide open for Q&A and definitely want to hear questions from you. So when that time comes, please feel free to type in your questions in the questions pane on your GoToWebinar control panel, and I'll be feeding them to our presenter, who is Nicole Newell. She is the partnerships manager with Preble, who is sponsoring today's webinar, and she'll be talking about easy ways to manage, refinance, and save on student loans and key considerations when choosing to refinance or not. Welcome, Nicole. Hello, Nicole.
Yep. Hi, John. Thanks so much for the intro.
All right.
Are you going to go ahead and switch the screen sharing?
Yep, I will give you screen control here in just 1 second.
Perfect.
And then you can take it and run.
Awesome. All right. Cool. Thanks again, John, for the intro. I want to also thank everyone for joining us this afternoon. Again, my name is Nicole Newell. I manage the alumni partnerships over here at Preble, and we're very excited to be sharing this webinar with University of Minnesota Alumni Association. So just a brief agenda. I'm going to give a little bit of background on Preble and who we are. We'll discuss the student debt crisis. We'll talk about student loan refinancing, how to refinance your student loans, things that you should consider before refinancing, getting the best offer, and then I'll take you guys through a brief Preble demo of our product, and we'll wrap it up with a Q&A session. So just a bit of background before we get started. I just wanted to provide this just so you guys have a better understanding of who we are and why we're really hosting this webinar today. So Preble was founded in 2012 with the idea of bringing simplicity, choice, and unbiased support to all of life's important financial decisions. So our main bread and butter is refinancing. So as it relates to this product and this webinar in particular, we're really just here to make student loan refinancing just much more simple and transparent. And we do this by allowing student loan borrowers to get pre-qualified refinancing offers from multiple lenders side by side on a dashboard. If you see an offer that you like, we make it very easy to request that offer and complete the rest of the refinancing process with that lender that you end up choosing, if that's the case. And I also want to point out that Preble is not a financial advisory firm, and we're not financial advisors. So the purpose of this webinar is strictly educational, shouldn't be considered financial advice by any means. We're really just here to provide education around student loans and to help you better understand student loan refinancing. Cool. So we'll keep this pretty, since student loan refinancing can be pretty complex, we'll keep this pretty high level. And as John mentioned, feel free to ask questions throughout the webinar, and then we'll get to those at the end of the presentation. So this is my least favorite slide, but unfortunately this is a reality. As you're probably aware, we were in and have been in the student debt crisis for the last few years. And I have this image here to really demonstrate the massive growth student debt has seen over the past decade. And this particular graph is actually from 2013 from the Federal Reserve Bank. But as you can see, it's nearly quadrupled from 2003 to 2013. And today we're currently around $1.4 trillion in outstanding student debt in the US. So there's about 44.2 million Americans carrying student loan debt, myself included. And the national average of student debt upon graduation being over 37,000. And this number doesn't even account for any sort of postgraduate work either. So this is strictly undergraduate. So you and the other 44 million Americans carrying student loan debt are probably wondering what you can be doing to get rid of this burden, and that's really where refinancing can help. So what is student loan refinancing? Before we get into that, one of the more frequently asked questions is the difference between direct loan consolidation and student loan refinancing, which is a great question because it's more complex than you think. Loan consolidation usually takes place through the Federal Consolidation Program, which lets you combine your government loans so you can make a single monthly payment. You can also extend the term of your loan at the same interest rate. And while that could lower your monthly payments, it could also mean that you end up paying more in interest overall. So we kind of look at this as like getting your house professionally cleaned, and then we look at refinancing more like buying a new house. So refinancing is where a private lender will pay off your loan or your loans from your existing lender, similar to mortgage refinancing, so you might be familiar with it in that sense. And the result is going to be a new loan with that new lender at a potentially lower interest rate or monthly payment. So there's an example here of a graduate named Cole, and he graduated in 2010. A lot of his federal loans were taken out at the peak of federal rates, but after refinancing, he was able to reduce his interest rate from 8.9% to 3.75%, which ended up saving him over $40,000 in total interest over the life of his loans. So why does student loan refinancing exist? Refinancing exists because lenders saw the opportunity to help graduates who did all of the right things. So you got your degree, you have a steady job, you're making consistent payments on your loans. So there's really no reason you should be tied to that high interest rate that you were given at 18 years old when you had little to no credit history. And there's a couple of other things that affect that as well. So a private lender is going to be subject to market rates. And not only have market interest rates dropped over the last couple of years, but they're often lower than a potential borrower's current interest rates. Additionally, your chance of default is also lower post-graduation. So a bank is willing to offer you a lower rate. They're willing to take a little more risk on you. And that's because after graduation, again, you gain employment, you have a work history, and this just makes you a better candidate because you're less at risk of defaulting. In other words, you're more likely to repay them. And then lastly, private loans are not a one-size-fits-all approach like federal loans are. They're personalized. And so, for example, federal loans are dictated by whatever year you took them out. And they don't take into account your credit history, your employment, or any options that would make you an attractive borrower at this point in time. If you take advantage of private loans, those are going to be customized for you, your history as a borrower, your income, your credit score, and so on. So how do I refinance my student loans? So without Preble, you're going to have to find lenders. So you'll be sifting through different banks, different credit unions, and the other various new lenders who are in the space. So you'd be responsible for finding those lenders, submitting individual applications to each one of those lenders that you want to be considered with. And depending on what you hear back from them, you would need to compare those offers and put them next to the other offers from the various lenders, and figure out which one makes the most sense for you. And if that sounds complicated or messy, that's because it usually is. With Preble, however, it's easy. All you do is fill out a simple form. This has about 13 fields and takes roughly 2 minutes. And by doing this, you're able to compare pre-qualified offers from multiple lenders on a single dashboard. So think about this as like a kayak for student loans. So you're really able to compare those offers based on what matters most to you, whether that's reducing your payment, reducing your overall repayment, reducing your term, etc. So now we'll go into a few things that you should consider before refinancing. So depending on your student loan repayment preferences, we typically see 2 different types of borrowers. Those looking to pay off their student loans faster, and then others looking to reduce their monthly payment. And payment terms can range from relatively short, which is like 5 years, to up to 20 years, which is a pretty big difference. So a lot of you may be thinking, which option's better? And this is really going to just depend on your individual financial situation. Regardless of which term you choose, it's going to make a financial impact both right now and into the future. So really thinking about your own individual situation will help in choosing short-term versus long-term. So obviously shorter term also means paying the loan back faster. Like any other debt, the quicker you pay off, the faster you're going to stop paying interest. Potential downside, depending on your financial situation, is that a shorter term can equal a higher monthly payment. So because you're compressing your payments, you will pay more each month. If you feel comfortable taking on a bigger payment each month, this might not be a bad thing for you and could end up saving you in the long run. But it could also be a burden to handle a higher monthly payment. So again, just think about your individual situation before deciding. And in terms of in a long-term loan, if you're feeling financially burdened and you need some breathing room while establishing yourself, a longer term could be the better option for you, as it presents lower monthly payments. So securing a low monthly payment can help right now. If your budget is already tight, it might be more of a beneficial option for you right now. One thing I do want to note here is that you will end up paying more in the long run due to interest, but this can be a better option than short term depending on your situation. So I did include a sample set on this slide, which are some repayment options that were once offered by one of our lenders. And so as you can see here, the monthly payment is going to be higher for that 5-year loan. But the borrower would save almost $10,000 in interest over the life of the loan when comparing it to the 15-year term. So again, there's not a better option on this. It really just depends on your own financial situation. Another thing you should consider is fixed and variable rates. So interest rates are an important concept to wrap your head around if you're considering refinancing. Especially when given the option to choose between variable and fixed rates. So first off, an interest rate is going to be the amount charged by a lender for the use of money that you're borrowing. For example, if you start out with a $10,000 loan balance at an annual interest rate of 5%, you'd expect to pay about $500 a year in interest. Depending on this type of student loan you take out, you may be offered a choice between a fixed and variable interest loan. But variable can change over the life of your loan, and a fixed is going to remain the same unless you refinance it again. So a few pros to fixed rates is that they are predictable. It's set for the life of your loan. You have no risk of losing that rate. On the other hand, you might end up leaving some savings on the table since fixed rates generally start higher than variable rates do. For variable rate loans, some pros are that you have those lower introductory rates. So if you're able to put a lot on your loan up front, you can potentially save significantly more. And then on the other hand, there's less predictability, making it a little more difficult to budget. And then one thing I want to point out is that you also have the possibility of interest rates significantly increasing over the life of your loan as well. All right, so should I add a cosigner? So who could benefit from adding a cosigner? Those with 680 credit score or lower, but with that being said, it's really never a bad idea to add a cosigner. If you have a cosigner who has a strong credit history and a high income, someone you have a strong relationship with, it's never a bad idea to have them on there, because all that does is lessen the risk of you as a borrower to that lender, and so they might be able to help you get a better rate. So in general, a few benefits that adding a cosigner can do: greater chance of approval, it lessens the risk taken by the lender, you could potentially get a lower interest rate. Drawbacks could be that they could be difficult to find. The cosigner could be held liable to repay in the event that you cannot pay your loans anymore. And they can take multiple years to remove. And again, all of this is going to be dependent on the individual lender, and they're not all the same, but just a few things that you should consider. Another important thing that I wanted to point out that is very, that I want to mention before refinancing is just that there are government repayment programs. And so if you're currently enrolled in an extended repayment plan or an income-driven repayment plan, you could lose some of those benefits that come with those loans if you do decide to refinance. So federal loans offer a few of these repayment options, and those typically aren't available with private lenders. And so that's just something that you want to be aware of before you decide to refinance. And then because you're going to be stretching out those payments over a longer period of time, this can end up increasing the total amount of principal and interest repaid compared to that standard 10-year. So again, just something to consider before refinancing. Cool, so how do I get the best offer? There are a few ways to get the best offer. The first one is going to be in good credit standing. Your credit score is very valuable in determining how good of a refinancing offer you're going to receive. If you're not there right now, that's fine. There's things that you can do to get up there. And if you have an average credit score, you'll probably receive an average offer. So I would just suggest trying to improve your credit score as much as possible before you look to refinance. Also, having long-term work experience. So proving financial stability will help remove that risk that may concern lenders. So stable employment for over a year will help validate this, as well as showing proof of, current payments that you're in good standing on making those. And then also be aware of current market rates. So keep an eye on this. Interest rates have been at historic lows over the last few years. And so it's not always going to stay that way, obviously, but just being aware of these current market rates is really going to help. Also apply with a cosigner. As I mentioned before, this can never hurt. And be sure to choose a cosigner with a great credit history and employment record. The idea of a cosigner is to add financial backing to your application. So the more qualified the cosigner is, the better. Have a low debt to income ratio. So regardless of what type of loan you're looking to take, having a good debt to income ratio is always important. lenders will look at your monthly debt as a fraction of your monthly income. And the lower your debt to income ratio, the better chance you'll be receiving the best refinancing offers possible. And lastly, check out multiple lenders. So be sure to compare multiple lenders to find the best offer that works for you. Lenders have different underwriting models to determine your loan eligibility, so your degree of qualification may differ between lenders. And this is really where Credible comes in, and you're able to request those pre-qualified offers from multiple lenders side by side. And we will go into a brief demo of the Credible dashboard. And just a reminder to continue asking any questions. I know most of that presentation was super high level, so please ask specific questions and hopefully we can get to all of those at the end. Sorry, let me just pull this one up here. Okay, cool. So this is our refinancing form. And I just kind of want to show you guys this to give you a sense of what Credible offers to borrowers, which is a simple, transparent experience for them to understand their student loan refinancing options. So I'm going to direct you to the right here, where just to reinforce who Credible is and what we do. I also want to point out our client support hours that are on the right here as well. They're available through phone, chat, and email, and I would definitely recommend utilizing them. They're our internal experts, and they can be really helpful, you know, in going through this process, just because it really is detailing can be somewhat confusing. So this is the form here. I'm going to go ahead and populate it to show you this. So I'm just going to ask you a few quick questions. There's about 13 fields in this form. And then it'll have you create an account here, which is just putting in a username and password. And then before you agree to find your rates, I just want to point out that by the terms that this is not going to affect your credit score. And it's important to understand how we're able to get you these personalized offers without affecting your credit score. So I'm going to explain that briefly. So it basically comes down to the relationships that Credible has built and the integrations built through those relationships into our process. So on one side is our relationships with the top credit reporting agencies. So think Experian, TransUnion, and Equifax. Those relationships allow us to run a soft credit inquiry on you as a borrower. So this doesn't show up on your credit report and it has no effect on your credit. What it does do is it gives us the necessary information combined with this information that you've given us up here to run up against the underwriting model of our lender partners. So for those of you who are unfamiliar with this term, an underwriting model is going to be how a lender assesses the risk of a borrower. So, excuse me, depending on the risk assessment, they will either be able to review, in this case, a refinance or not. So each lender has their own underwriting model, and we, as a part of their agreement to be on the Credible marketplace, insist they give their underwriting model to house on the back end of our site. So I know this is a long explanation, but it allows us to combine the information that you've given us with that soft credit inquiry information and run it up against those underwriting models that we house on our back end. And the fruit of that for pre-qualified borrowers is that we can show you these offers instantaneously in a kayak style dashboard. So we'll go ahead and see what types of offers we get here. Cool. So this fictitious borrower over here received 35 pre-qualified refinancing rates. And that is a lot. And so if you want to sort those, you can toggle the different parts of the different interest rates, the terms, the monthly payments. And you can also filter depending on what elements are important to you. So say I want a variable rate, my max payment, I want it to be no more than 300. And let's do 5 to 9 year and 10 to 14. Oh, looks like, there we go. Cool. So after you decide which offer you're interested in, you'll need to turn this into a firm offer by filling out more information here. So basically, it'll have you input some more information. And one thing I want to note here is that at any point in filling out the rest of your information, you can walk away from this, and Preble will not submit any of this to any of our lenders until you finish the process by clicking Submit My Information. So even at this point, only the lender that you do choose will see your information because it makes it easier to start the refinancing process with them. And that pretty much covers the demo. And I think we can go ahead and jump into Q&A for the next 30 minutes.
All right, thank you so much, Nicole. I am literally just going to go down the list of questions that have already come in, and so I will be upfront with the audience that, like, my background is not in financing and debt, student debt management, so that's why Nicole and her colleagues are online. So if I repeat a question, I apologize for that, but just want to make sure that I reflect everyone's questions most appropriately, as each person's case is often unique. So, all right, first off, question from one of our attendees. How would it work if a portion of my student debt was taken out in my parents' name? The person says, I pay debt for them, but they took them out, the loan out, but still have a relatively high interest rate. So the question is, I could not refinance, correct? They could, but their credit history was already taken into account when the initial loan was created. Thus, I'm guessing it wouldn't necessarily be worth it, question mark.
Okay. Hi, this is Sandeep here from the client success team at Preble. I believe you're looking to refinance a parent plus loan from the parent to the student. One, I do want to mention I'm not a financial advisor. I can't give any sort of financial advice. So we do have one lender on our platform that can do that. So you would come onto credible.com, fill out the form that you just saw, and you would want to see if our partner lender, iHelp Extended Rates. iHelp is the only lender that is currently on the Credible marketplace that can take a parent plus loan directly from the parent. And other option is you can have the parent come onto our platform and they would put in their education history to refinance a parent plus loan, and they can add the student as a cosigner to the request, and that would be one refinancing request. And a few months later, 30 to 60 days later, the student who is the cosigner can refinance again on their own. They would go from the cosigner to becoming the main borrower, and the loan would be underneath their names. But these would be two different refinancing requests if you went that route.
All right, thank you so much. Next question. Between my husband and I, we have $250,000 in student debt, so that's between undergraduate and law school. Because of capitalized interest, the large balance, and a small ding on his credit history because of one late payment, we have been denied any sort of refinancing from companies such as Preble. What advice do you have for people in our situation who badly need to refinance but can't get further than the application process?
Okay. If you have used our services, you can definitely call into our support line to see if there is anything that we can help with in terms of helping you move forward if you were denied. In general, once again, we're not financial advisors. If you've been denied through the pre-qualification form on our website, our recommendation is that you can work with some sort of debt management company or credit repair company. Student loans in general, like if there are any derogatory remarks, lenders do look at that and you might not qualify. However, some lenders will overlook that as long as the payment history is pretty accurate. The other option you have, which once again, this is just an option and I'm not a financial advisor, is depending on the loan amount, you can take out a personal loan. We do have personal loans on the Credible platform. However, personal loan rates generally have higher interest rates than student loan rates. And there are fees associated with personal loans.
Okay, and then this was from the same person who asked that last question. Can my spouse be a cosigner?
Yes. So we just released a feature, which is a first on our website, and I believe within the whole student loan refinancing world, is if you want to come back onto Credible.com, you would do a new request as a main borrower, and then you can add a cosigner. You can add up to 20 different cosigners, and we will do a soft credit pull to see if there are rates available. So we just released that feature about 2 weeks ago. So please feel free to go on to Credible.com and check that out.
Okay, and just one quick follow-up from the first question. With the first question about you had mentioned the one option who might be able to take a Parent Plus loan. Could you repeat the name of that organization again?
Yes, so once again, you would want to go onto Credible.com, fill out this student loan refinancing request. It will take you 2 minutes. If you receive rates from our partner lender, iHelp, they are the only lenders on our Credible marketplace that can refinance a Parent Plus loan directly from the parent to the student.
Okay, and that was iHelp.
Yes, IHELP.
All right. All right, next question. With these types of loans, do you have the ability to pay more than your monthly payment?
Yes. So the great thing about Credible, there are no fees to use our service, and there are no fees to refinance with our partner lenders, and there are no prepayment penalties. So if you're making any payments beyond your monthly minimum payment, it goes towards the principal, and you'll be saving on the life of the loan.
All right, thank you for that. Next question. What happens when you are the person... Okay, let me start over again on that one. What happens when you are the person with the good credit rating? What happens when you cosign? Would this be applicable to buying a house too?
I'm not 100% sure I understand that question. If you are co-signing a student loan refinancing for someone, you are financially responsible for that loan as well. So it is going to be on your credit profile. It will be reported to the credit bureaus. If you're looking for like a co-signer release, it is different for each lender. And I recommend you contact our client success team and we can go over what the releases are for each lender.
Thank you. Next question. What is Credible's unique selling point versus other companies offering the same product such as SoFi?
Okay. Direct lender, and they are one lender. Credible, we are a marketplace. We have 6 different partner lenders that we work with. So if you go to SoFi, you just get rates from SoFi. Credible, we're a marketplace. You come to our website, you fill out a form that takes you 2 minutes, and we do a soft credit pull to see if rates are available. And if rates are available, we'll go ahead and show you what the rates are from different lenders that we work with. So some of our partner lenders are College Ave, Citizens Bank, iHelp, MIFA, and RISLA. Those are just some of our partner lenders. So the benefit of using Credible is we are a marketplace. You fill out one form on our website. We do a soft credit pull, which does not ding your credit, to see if rates are available. And we'll go ahead and show you what the rate, monthly payment, and the savings is on our dashboard. And if you wanted to move forward, it takes about 5 minutes to finish out the rest of your profile. And our client success team will guide you through the entire process from completing a request and from starting a request and completing it directly with the lender. So you work with one dedicated client success specialist here.
Great. Next question. What are the benefits or drawbacks of an income-driven repayment plan?
I unfortunately cannot answer that question. That is financial advice. IBR is a federal program that none of our partner lenders offer. Since all these student loan refinancing lenders are private lenders, that is not a benefit that they offer. And unfortunately, I can't answer that question in regards to income-based repayment.
All right, thank you for that. Do you have to have collateral like equity in your home to qualify for these?
So our partner lenders will require proof of income. So usually they'll require proof of income by a recent pay stub within the last 30 days. If you have any additional income, such as rental income or retirement savings account, then you would upload those documents directly to them.
All right. Next question. If I use Preble or just look for refinancing options on my own, is it possible to combine loans held by multiple lenders? Example, if I pay loans to AES, Wells Fargo, and Navient, could I refinance them all into one loan, or is that only an option with federal consolidation?
Okay. So once again, just a disclaimer, I'm not a financial advisor. The benefit of a refinancing versus consolidation, when you consolidate, you're aggregating all your loans into one and they're averaging out the rates and the rate of term left. What refinancing does is you're taking out a new loan to pay off all your existing loans. So yes, you will have one loan. However, it's based more on your credit profile. So it's your credit score, debt to income ratio, income, and any derogatory remarks you might have reported to the credit bureau. So refinancing is kind of like consolidation. However, it's based off of your credit profile. And yes, it is. If you have 4 different loans with 4 different lenders like Wells Fargo, Sallie Mae, Discover, and you wanted to move forward with one of our partner lenders, they'd pay off all those lenders and you'd have one loan with one lender and you'd be making one payment.
Thank you. Next question. Are there any refinancing options that offer continuing education deferment like federal loans do?
Yes, it depends on the lender. So if you receive rates on our platform, you can chat in or call into our client success team. But there are different options from different lenders if you have continuing education.
Next question. I currently receive a 1098E each year from my student loan lender, which sometimes contributes to entitling me to a tax refund. Is that form only a function of my original student loan, or would a new lender through Preble also be able to provide this tax form each year?
I'm sorry, you cut off there. Can you repeat that, please?
Sure. I'll start from the top. I currently receive a 1098E form each year from my student loan lender, which sometimes contributes to entitling me to a tax refund. Is that form only a function of my original student loan, or would a new lender through Preble also be able to provide this tax form each year?
So I believe this is the student loan interest rate tax deduction that they're speaking of. So each lender, yes, will provide you with that as long as you qualify according to the IRS. So I believe if you make an X amount, then you can get a tax break on student loan interest. So there is an IRS article that does define that. So if you currently qualify and there's in the next year or so there is no financial change in your income, then you should still be able to qualify. However, you can always give us a call and we can send you a link to the IRS document that we have.
All right, thank you. Question from somebody who is graduating this August. When would you recommend filling out this form? I know on the form when we went through the demo, it asked if you were working for 2+ years, etc. So is it something where we should be working for a little bit of time before trying to refinance?
Some lenders do require that you have 2 years work experience, some don't. So if you're graduating recently, as soon as you graduate, you can come onto our website and see what pre-qualified rates you get. If you want to move forward with one of those rates, you absolutely can, or you can come back in a month or two. If you have, let's say, your income changes, then you can try to go through the pre-qualification process again. Generally, the rates are good for about 20 days or so. However, if there's any discrepancies or changes in your credit profile, the rates can change. But once again, you don't need to have 2 years of full-time work experience. We have lenders that will refinance if you have less than 2 years of full-time work experience.
Okay, next question. Do private lenders offer any deferment or forbearance options if some event results in a temporary inability to pay the monthly payment?
Yes, they do. However, that's going to be, once again, it's going to depend on the lender. So some lenders do offer some sort of deferment benefit if there's unemployment, disability, medical reasons or whatnot. So it's going to depend on the lender that you choose. You can, once again, call the client success team, or you can chat on our website and we can give you that information.
All right. Another question's come in. When we refinance loans, do we have to refinance all of the loans we have, or are we required to choose which loans we will include in our refinance?
That's a great question. You can pick and choose which loans you want to refinance. However, if you have 4 different loans, you can't just refinance half of a loan. You have to refinance the entire balance. So once again, you can choose whichever loans you want to refinance, but it has to be the entire amount.
All right. I'm just scrolling through. Okay, another one popped in. Yeah, and definitely if people have questions still, or if there's some clarifications that we haven't covered, feel free to ping that, because I may have missed some as we're scrolling through some of the questions. Next question, is it possible to consolidate and refinance at a lower rate at the same time?
Yes, it is. Once again, it's dependent on your credit profile. So the rates, when you come onto Credible.com, when you fill out that form, we do a soft credit pull to see what rates are available. If rates are available, we'll go ahead and show you right away. So you can consolidate at a lower rate, but once again, the rates are extended based off of each client's credit profile. So I believe the average user, don't quote me on this, I think the average users that has refinanced with Credible has lowered their interest rate by, I think, 1.822% in the last year or so. But we do have a blog article. If you go onto credible.com/blog and you type in savings, you can see the general estimated savings that our clients have had.
Okay, and you might have answered this in the original answer about that, and I know it was kind of a one where the disclaimer about not being a financial advisor, but back to the question about the benefits and drawbacks of an income-driven repayment plan. The person who asked that question then, so I'll kind of ask the full question that I think she's outlining, is that what are the benefits, drawbacks of an income-driven repayment plan versus refinancing with a private company? And you might have already addressed that in the original answer. Again, this isn't my ballywick, so but I wanted to circle back on that question for her.
Yeah, absolutely. And once again, I would love to answer that question. I'm not a financial advisor. Like, to give you some examples, and this is just based off of me talking to one of our clients that went from an income-based repayment to a private student loan. The monthly payment that they were making towards their income-based repayment plan, they just saw how much was actually going towards the principal versus the interest. we were able to get them the same monthly payment at a lower interest rate. So for that specific client, it made sense for her, based off the information she had, to refinance from IBR into a private student loan refinancing. So once again, it's a really tricky question. I can't really answer it, but it's going to depend on each person. We do actually have really great resources on our blog on Incredible.com/blog. If you type in income-based repayment or IBR, there are a few blog articles that we have. Or if you like, you can definitely call us, and we can go through if you go through pre-qualification, I can have our client success representative kind of calculate and see if it makes sense for you to go from an income-based repayment plan to a private student loan. So once again, that'd be probably the best thing to do. Fill out the request, and then I can have someone from my team definitely give you a call, and we can see if it makes sense or not.
Great. Couple questions have popped in. Are there upfront costs?
So once again, there are no fees to use Preble. I wish I had $1 every time someone asked me. It sounds too good to be true, but once again, there are no fees to use our services here at Preble. There are no fees to refinance with any of our student loan refinancing lenders, and there are no prepayment penalties with any of our student loan refinancing lenders.
Thank you. How does the credit information you see compare to the credit information on a site like Credit Karma? Are they similar?
Great question. So Credit Karma actually uses something called Vantage 3.0, which I am not going to go into detail. So if you want to look into Credit Karma's Vantage 3.0 and how they calculate scores, you're more than welcome to do that. Credible, when you come onto our website, we do a soft credit pull based off the information you provide and the accuracy of it with each credit bureau, so Experian, Equifax, and TransUnion. And once again, the soft credit pull does not affect your credit score, but that's how we're able to determine if rates are available from our partner lenders. So we are going directly to each credit bureau to do the soft credit pull.
All right, I think that's the questions that we've gotten online today. The folks who are still with us, you can see the FAQs and blog and some of that contact information for Credible if you'd like to follow up with them to learn more. So just want to say thank you to both of you for sharing your time and expertise today.
Feel free to utilize our client support team. As I mentioned earlier, they're our internal experts and are very, very helpful in guiding you and helping out throughout the process. So feel free to utilize them. They are available through phone, chat, or email. And again, our blog has a lot of posts on there that could also be beneficial if you guys have further questions.
Well, thank you so much to both of you, and appreciate your expertise and sharing your time with us today.
Awesome. Thanks, everyone.
All right. Thanks to our partners at Credible for some of the information today about student debt management and refinancing. Obviously, a pretty complicated topic, and each person's scenarios are a little bit different. So really appreciate some of the different insights and options that they explored today. And again, if you're interested in kind of more of a faculty webinar coming up, we have one coming up on May 24th on early autism identification and intervention. And then as we gear up for, boy, it's already going to be the 2017-2018 school year coming up soon. We'll have a whole fresh slate of webinars both in the fall and spring. And definitely stay tuned to your email or our social media channels to learn more about those as well. And in conclusion, again, these webinars are made possible in part by Alumni Association members who support outreach like the webinar series and a lot of the events that we do in person here in the Twin Cities and around the world. So if you'd like to be part of our community and help support the alumni work happening at the University of Minnesota, just visit umnalumni.org/membership. Have a wonderful day. It snowed here in Minnesota. As Prince sang, sometimes it snows in April, and that's what happened today. It looks like it's melting. So wherever you are, I hope you have a wonderful day, and we'll talk to you soon.